Well, ladies and gentlemen, my name is Greg Michalowski from Greg Mike FX, and I'm going to talk to you a little bit about the dollar versus yen as it is still coiling like a spring. Today's date is July 8th, 2014. My email is greg@gregmikefx.com. You can also follow me on Twitter at gregmikefx. And if you like this video and want to see more, just click subscribe on the Greg Mike FX YouTube channel. All right, let's get into it. We'll take a look at this dollar versus yen. Let me get my screen centered here properly. All right, looking at the daily chart, what do we have here? We have the dollar versus yen sitting in between this blue line on the top, which is the 100-day moving average, and the green line on the bottom, which is a 200-day moving average. If you look going back in time, 1, 2, 3 different points, we fell through that trend line so briefly, maybe 3 days, and then moved back above, and we've been above that trend line since that time. We've also been above the 200-day moving average since that time. So the bulls are just hanging on with the bias here, staying above those levels. The 200-day moving average comes in at the 101.70 level, and so does the trend line in trading here today. This 100-day moving average currently comes in at 102.16. And either the market's going to break to the downside or break to the upside. That's what we're looking for here in the dollar versus yen. I don't really have any preconceived notions here. I don't think it makes sense for traders to get on one of the bandwagons here. You can buy against the low and sell against the high level and look to ping pong in between those two levels. But at one point, the market is going to unwind this coil and make a move to the upside or to the downside. Let's take a look at the hourly chart, see if we get any clues off of the hourly chart, or see what the bias is from it. And if we look at the hourly chart today, or where we are currently, we're also in between the goalposts as defined by the 100-hour moving average on the top side and the 200-hour moving average on the downside. The 200-hour moving average is actually below the 200-day moving average, which comes in right at that 50% retracement level at the 74 level. So any sort of move to the downside that moves through the 101.74 level is going to also have the 100-hour moving average at the 101.70 level to contend with in this trend line right here. So it's all coming together like a big, huge snake, coiling to make the move on the top side. The 100-bar moving average is not that far away. That level currently comes in at the 101.89 level, and we have ways to go before we get up to the 102.16 level, which is a 100-day moving average. So the point here is, folks, that I think we even narrow the range down a little bit to say that well, we'll give it this range right here, and look for a break either to the upside above the 100-bar moving average and continued momentum in that direction that would eventually take us above the 100-day moving average, or a break through the 100-day moving average, 50% retracement, and 100-hour moving average at the 101.70 level up to the 101.74 level. That would be the course of action on the downside, and look for momentum on the break of that. My name is Greg Michalowski. If you like this video and want to see more, click on the subscribe button right here. And for more information on trading Forex, visit me daily at gregmikefx.com. Good fortune with your trading.